What do buy here, pay here lots, payday loan, and title loan companies have in common? They're all subprime lenders, and in this video, I explain why I avoid subprime lenders. For starters, who are subprime lenders? Well, they're the companies that we go to for payday cash advances, fast money loans against car titles, and those are the car lots that offer in-house financing. Subprime lenders typically service women, minorities, elderly, the military, and blue-collar workers. Subprime lenders thrive on those of us in need of immediate cash who don't have access to savings and are not eligible for traditional loans because of limited credit history, poor credit, or credit blemishes. Because of these credit problems, the subprime lender assumes that the customers they serve will default on the loan repayment, which makes providing the loan a risky investment for the lender. Where there is high risk, there is high interest rate. But in addition to the high interest rate, subprime lenders also add additional fees, which cause the loan amount to double or triple in size. Subprime lending gives access to money, cars, homes, and so on and so forth for those with no or low credit. But it makes it difficult to satisfy this loan by charging high interest rates and unnecessary fees. This increases the likelihood that the loan will not get repaid. The subprime lender knows that you will be tempted when they offer you a stack of cash, your dream car, or your dream home, and they feed into our desire for instant gratification. But very often these dream items come with a super high interest rate, hidden fees, and a longer repayment, which means more money spent in the long run. It seems like each payment you make always seems to go towards everything else except the principal or the main loan amount. By not being able to pay down the main loan amount, you will get locked into a debt cycle, which is discouraging and can cause the customer to stop repayment on the loan, thus resulting in foreclosure, repossession, and increasing poor credit. So how do we avoid this debt cycle? Well, stop. Don't make decisions impulsively. Ask yourself, do you really need this item, or can you wait until you can afford it? Next, read before you sign anything. Ask questions and make sure you understand what the terms are. You can also shop around for the best rates and make sure that whatever you sign is easy language and you understand the repayment terms. Third, the tried and true method of saving. Saving for an emergency, a rainy day, or even a big purchase is the best way to avoid the debt cycle. Alright friends, if you found this video helpful, please subscribe to the channel. It really motivates me to keep making this content. Also, make your presence known. Type "good video" in the comment section and share this video with all of your friends and family. Thank you for watching, and I'll see you back here real soon.